So guys, welcome to today's section, and today we'll be trying to round up everything which we basically have learned so far. So safe to say this is going to be the last recorded session, right? So breaking down everything, I'll try to summarize everything about the way I trade in this video. So if you haven't gone through other videos, you don't need to worry much. If you have previous knowledge, at least 30% of what I talked about in previous videos, you should not worry more, because it's just going to be a round of how you compile everything to form your strategy, right? So what are we looking at today? Today we're looking at two things. We're looking at two concepts. Now I'm trying to merge all stuff together, and then if I have more time here, I will add confirmation to the list. Confirmation entry. I'm trying to merge everything together. So first of all, let's go back to the point of interest. Now, on our previous video about or session about liquidity, I said something about the left side liquidity, which is basically where the smart money entered or where institutional orders were executed. And if you can remember, I have something like this. Here's my tool. 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 I should bring out my favorite drawing tools here. Here are my favorite drawing tools. They should be somewhere here. Okay, see them here. Okay, from what I said about left side liquidity taken out, so this was basically a swing low that was taken out and then price broke structure, right? So I told you that this is what we take as what this was where institutional orders were taken were executed. That's where smart money executed. They had to take out the early buyers, take out, then have a break of structure, right? So that will be our first point of interest. And the second point of interest, something I call the breakout block. Now, mind you, I did not say breakout block, breakout block. Now, the difference between a breakout block, if that's what you trade, is that a breakout block is only a failed order block, right? Then you have a retest. Something like this, what you call your breakout block. You have your order block that failed, and then you expect price to buy off from it if it's a bullish breakout block. But then the difference between a breakout block and a breakout block is that there was an accumulation of orders at a particular zone before price broke through it. Now, this is what I mean. For instance, here we have a break of structure, right? And then we have this other block that broke structure. This is a bearish scenario. We have this other block. We have this break of structure first of all, and then we have this other block that caused the break of structure. Now, instead of price to directly break this zone, it does what? It's ranged here. It accumulated orders here before it did what? Before it broke out. So this zone here, you can clearly see the difference. That at this zone here, there were accumulation of orders, showing that they were interested sellers at this zone, and then they are taking out, and we expect price to come back to that same price level before buying off. So if you look at these two scenarios here, you can see that this has more this holds more orders or more value than just a single break of structure or a single breakout. That's why I call this a breakout block, and then this is a breaker block. So the 2 points of interest we'll be working with are the swept order block, Where is my text to? The 2 point of interest we're looking at. Points of interest looking at are one, swept other blocks, and then we'll be looking at two, breakout blocks. So now we've seen the two basic point of interest. That's what we're looking at to do or take up our trades. That was basically a point of interest means for those that don't know. So we looked at the point of interest. Now, how can we combine all these stuff together? Now, first of all, you have to know look for where your liquidity was taken out. We have this liquidity was taken out, and then we have a break or structure. So now we have our point of interest. Our point of interest as the low that caused the break or structure and swept liquidity. Your point of interest should sweep liquidity and break structure, right? So stick to this video. I know most of you will be like, I know most of these things, but then there are other deeper facts which you don't know. You might know the textbook setup, but you don't know how to validate and invalidate your entries for a higher win rate. So I'd rather you stick to the end of this video. So once you have a zone that swept liquidity and caused a break or structure, you have to look for a valid inducement. Now, what do you know as a valid inducement? A valid inducement should be at least 50% of your swing points. Now, to avoid you mixing up things, just know that your inducement should be close to your POI, like this. Now, you see that I didn't put this inducement here. It's not far away. A mechanical way you can easily do it is that you draw your Fibonacci from where you have from your point of interest, from the low of your point of interest. That's where basically the sweep happened, to the high before the drop. So this is where I draw from, to the high of your swing high point of the setup, and then you measure this the premium, this is the discount. So we are looking for our inducement to be deep into this zone, right? So to avoid mixing things up, you can just know that your inducement should be very close to your POI, shouldn't be far away in your POI. So we have our inducements close to your POI, which is basically a trap for people that sell early. Let me get this more closer. Basically a trap for those that will try to buy early. And then you now have your point of interest that sell liquidity and broke structure. You have your inducement, and then you have your point of interest. Now you can either enter this setup with or without confirmation, but then with confirmation you have a higher chance of getting a higher win rate, but then you tend to lose one or two entries. But then if you consider the win rates with there are pros and cons, right? With confirmation you tend to miss some entries, but then your win rate is higher. But then with no confirmation, you take all your valid setters, and most of them might go well, most will hit stop loss. So they're basically almost the same. They'll give you almost the same percentage gain in the long run, because the win rate of confirmation is more higher, but then the strike rate of no confirmation is much more higher. So it also covers up the trades which you missed. So basically I use confirmation, right? Wait for a confirmation which will dive into deeply by the end of this section, and then you take your trade. So let me show for a bearish scenario too. Bearish scenario, you have your sweep of liquidity, and then you have your break of structure. You have your break of structure. So once you have your sweep of liquidity and break of structure, that forms this point of interest, right? You're looking to sell off from that zone. And then now you wait for your what? Valid inducement that broke structure, and then you take your trade off your what? Point of interest, right? Now for a breakout block setup, you look for let's use the sell scenario because it just buys more. So let's say this is a break of structure. This is a break of structure, right? This is a bullish break of structure, and then we have price mitigated the origin of the break of structure. That's the other block. Let me get this. The other block, and then it failed to hold, just consolidated, maybe because an internal break of structure, consolidated, and then finally broke structure. So now I'm looking to do what? Sell off from this breakout block. But before we sell off, we need what? Inducement. That's, we need fuel to add to the sales. So wait for a valid inducement that is close to our point of interest, that broke structure, we enter, then sell off. As easy as that, right? And yeah, same as in the bullish scenario, look for a failed sell order block that held price for a while and then broke out. You have your valid inducements, then you have your trade off your breakout block. You want to have all these confluences together. You have a valid trade, sweep of liquidity, break of structure. Just write it down somewhere. Sweep of liquidity, break of structure forms your POI. Look for a valid inducement close to your POI that broke structure, and then you take your trade off your POI or you use confirmation. So the win rate of this setup is very high, though most times you can just experience few losing streak, but then it works most of the time. So now we'll go over to what? Multi-time framing. So what's multi-time framing? Multi-time framing is just how you align your setups to a more organized trading environment. It just helps you analyze. If we think I need water. Okay, multi-time framing just shows you how you do your top-down analysis to know the time frame used for your analysis, to know the direction of the market and to trade in line with the direction of the market. That's what multi-time framing allows you or helps you do. It just helps you know the overall direction of the market and then you trade in line with it. So what time frame do I use for my multi-time framing? Now, number one is that I start from the daily time frame. Daily time frame for my what? Buyers. Then 4 hours time frame for shifting structure. Stroke. Let's say shifting structure, and then we use the 1 hour, 2 hour, 4 hour for what? For setups, and then the 15 minutes for confirmation. So any time frame other than this, I'm not interested. What's happening in other time frames, I'm not interested. This is only what I'm looking at any day I come to the chart. From the daily time frame, I know my buyers. I go over to the 4 hours time frame, check if price is either retracing or is following the pro trend move. That's the expansion move. Once I see that, I either go to the 1 hour, 2 hour, 4 hours for a valid setup, and then the 15 minutes for my confirmation. You understand? The let's take a look at a chart example. So I just love using USD CAD because the price action is much better considering the economic events you've been having recently. So yeah, on the daily time frame, right? On the daily time frame here, I would have used my valid rate, but I think my subscription has ended. Let me see. I think my subscription has ended. Let me check. So yeah, my subscription has ended. I will have to sub later today. But then on the daily time frame here, we have a break of structure. Let me cancel this plate. So I don't want to mess up this stuff. Okay. The daily time frame here, I have this break of structure. So now my bias is what? My bias is bullish, right? I'm looking for buys at the discount. Remember, don't forget, break of structure, looking for what? A market structure shift to buy at the discount. So once I see a market structure shift at this zone, where is this zone? Okay, I just feel this two was this backtesting tool I have already subscribed. If I knew I haven't subscribed yet or it has expired, I shouldn't have done this class. I would have just waited till I did it. But then let's go. I have this break of structure, right? You know that price is bullish, so I'm looking to do what? Buy at the discount, and then or wait for a market structure shift to be sure that this trend has shifted. So that's where I go over to my 4 hours time frame. So assuming this was a break of structure, right? On the internal time frame, we are seeing stuff like this: a break of structure, break of structure, break of structure, break of structure. Now, I'm not interested if the 1 hour time frame shows a market structure shift, because it's going to be a weaker time frame considering the time frame I'm using for my buyers. I'm using the daily time frame for my buyers. So the 1 hour time frame for a market structure shift is a bit weak. So I'm only interested to see a market structure shift on the 4 hours time frame. So that shows me that okay, this time frame is solid enough to show that price has changed direction. And to confirm it further, wait for an eyeballs, an internal break of structure. You understand? And then you trade into the discount and look for another 4 hour shift in structure, and then an eyeballs to continue the trade. So you can see daily time frame for your buyers. Where is this stuff? Where did I write this stuff? Daily time frame for your buyers, 4 hours for shift in structure, and then 1 hour, 2 hours, 4 hours for each time frame for my setups. So assuming you have seen a market structure shift, and then you wait for, so let's say this is a market structure shift here. I've explained this earlier. You draw your Fibonacci tool from the high to the low, get your premium, get your discount, you sell from the premium to the discount and all those stuff. So let me use a practical example. This is going to be tough without a replay, so I'm not used to teaching without replay, so it's usually hard. But let me use this stuff here. We have a breakout structure, right? And they were looking for a market structure shift. Every breakout structure show that price is bullish, right? And then I have a market structure shift on the 4 hours time frame. That's the only time frame I'm looking for a valid market structure shift, right? So I've seen the 4 hour market structure shift, I know that okay, price has momentum to change direction, and then it has also been confirmed by an eyeballs, right? That's an internal breakout structure. Now we have the daily swing low and swing high. So I'm looking for what? Price to trade into the discount for an expansion to take out the daily weak high, right? Because after the daily break of structure, we have the strong low and we have the weak high above. I hope you guys remembered all these things. Okay, we have all these things. So when I was in my 4-hour market structure, I'm looking for what? Sales down into this zone. So once flying into this zone, I'm not looking for sales anymore. I'm looking for what? A market structure shift on the 4 hours to buy, to take out the zone. So this is how I trade. This is the order flow that's going to happen here now. So once I've seen this, I will have my new zone from here to here. Wait for price to trade into the disc onto the premium, because I'm looking for sales here. Premium, I'll sell off, right? I see another sweep, break of structure, inducement, and then POI. Now, do I take this setup? I don't know. How do I know? I draw my Fibonacci 2 from the highest point to this point. So it's in discount. I can now sell off. So for this class, I'm not going to give assessment. You are just free to ask questions. You are free to ask questions of any stuff you don't understand. I'll give you guys the chance to ask questions, because this is basically the last class. So there might be questions you have that might not be answered. So we have this and we have the expansion. So that's basically how it works. So let me see, for instance, you are looking to sell, you are looking to do what? Sell into this zone, right? Sell into this zone, and you're looking to sell at the premium, and you're not interested in the discount, because this you are seeing the sell area. You're seeing the sell area on the daily time frame, right? I hope you guys understand the concept. Let me move over to the next stuff. So now we'll go over to confirmation entry. Okay, valid breaks. Don't go to valid breaks. Now, what do I mean by valid breaks? Now, setup should form a break or structure. Let's say this trying to see. Okay, let's say this is a break or structure. Price is bullish. I'm going to give an example. You guys should know what I'll give an example. After rounding of things, I'll use 1 or 2 setups to give an example before we cut this off. We have a break or structure. And then now inside this zone, now we have a sweep, break, inducements. Now this setup is not valid. We have the sweep, right? We have a break of structure, and we have inducements. But now this setup is not valid. Why? Now remember, we have a break of structure. We have a protected low and a weak high. Let me mark it out. After break of structure, we have a protected low, and then we have our weak high. Then we're looking for price to break this high to know the next move. But then remember, I said your setup should do what? Break structure. Setup should sweep liquidity and break structure. Now this sweep of liquidity here, this was not a break of structure to the downside. There's no valid break of structure. Your price is still inside these 2 zones. Haven't caused any break of structure yet. So I already be interested in this buys if price had broke this high. So I know that now here's now the new protected low, and then price is targeting this new high. But for as long as price is still ranging below these 2 points, this is just more like a consolidation. There have not been any momentum change the market to determine the bias or direction of the 4 hours time frame, or the hourly time frame, or the 2 hour time frame. I don't know the time frame I'm using, but then there have not been any momentum change in the direction depending on the time frame that you are using. So I will be interested if price broke structure like this, then I'll know that okay. If price broke structure like this, I'll be like, okay, this is a break of structure here. Like this setup has broken structure is now a strong setup, because the low is now protected, and then this high is the potential target. I hope you guys understand. So let's use a counter trend setup for example. Now this is a bearish scenario, and then we have this sweep of liquidity, this shift. I will not call this a break of structure. So this was a bearish structure. You have break of structures. You have break of structure, and after the break of structure, remember we have the protected high, and then we have the weak low. So now you see this sweep of liquidity. This is not a break of structure because price is not close. So for your break of structure, you are using weak to body to know a break of structure. But if it's more harder for you to use, you use the line chart to look for a break of structure, right? So in the candle chart, you are using weak to body. So except this two here is a weak to body scenario. This is what I mean by a weak to body scenario. This is the weak of this. This is the weak to a body of a candle. This is a valid break of structure. So a weak to weak scenario, let's see a weak to weak scenario. That's what we know as a sweep. A weak to weak scenario. A weak to weak scenario. This is not a valid break of structure. You can also see with your eye, this is not a valid break of structure, right? So unless this scenario here is a weak to body, they can know that okay, this is a valid break of structure. Otherwise, this is just basically a sweep. It hasn't broken any structure. So you are either looking for you to take out this protected high here, for you now to have your no protected low, meaning that your setup is now protected, and then you target the weak high. I hope you guys understand this. So that's basically how you multi-time frame. Make sure your setups break structure. After your break structure on the daily time frame, you have your discount, you have your premium. Let's use the buying scenario for example. Once you have your market structure shift on the 4 hours, you can start looking for your sell scenarios till you get to the discount of the daily time frame. Look for another market structure shift, show that the buyers has taken over, and then you trade to take out the weak daily swing high. Let's now go over to the last and the most important part of everything, which I'll soon make it more understandable. Let me check my battery percent, which is basically confirmation. Now confirmation is a general topic. There are many ways people trade it. Many people have their various confirmations for their trades. Most people use candle confirmation, which I was basically using when I was using confirmation. I used the bullish engulfing candle and all those stuff. But then, due to what works, I use what I call the breakpoint model. Now let's see, what's the breakpoint model? You have your setups aligned, you have your sweep of liquidity, you have your break of structure, you have your inducement, and then you're looking for your to buy, right? So I have seen people that just buy off a market structure shift. You just wait for price to do this market structure shift, then price should do this. I mean, this is good, right? But there's a more deeper way to understand market structure shift. Let me zoom out. Now, assuming you're looking to buy at this zone, you're looking to buy, right? And price broke structure, another break of structure. Then now, price broke this first break of structure. We say this is a market structure shift. No. Why? Because this structure here that broke is going to be used as inducement for the higher structure, for the higher here to do what? Take out this zone. So what you see that once price does something like this, price use this first as inducement to this second to do what? Take out this zone. That's when you see most times your POY fails, because there was a precision order flow approaching your POY that is going to do what? Take it out. Right? It's going to take it out. So a safer way to do this, what I call a breakout point model, is that you wait for what? Price to break the first structure and show a market structure shift, then you enter at the breakout. Remember what I said about breakout blocks? So you enter the what? Breakout. So where is the breakout? Basically this area that had an accumulation of orders. Or you wait for the first two structures to be broken. This is the first structure, this is the second structure. You wait for both of them to be broken, and then you wait for a retest to any of the structures, depending on how much space you want to give your stop loss. You can just take out the first structure, the second structure, but just make sure you are not being too conservative with your SL, as you miss profitable trades. So once it's something like this, you wait for once price break the first structure and the second structure. Now you are not confident enough that buyers has taken over from these sellers. So even though there's a third structure above, these two structures have been taken out, gives you the assurance that okay, buyers have stepped into the market, and then you take your buys. I will use the second breakout as an example from this breakout, and then you buy off. It's a very simple concept. So you don't trade this. You either wait for the first structure to be broken, then a break of structure to confirm that they are two. Just know it as a two-step verification. Okay, that's the more easier way I'll put it. You either wait for the first break was an eyeballs, or you wait for the two structures to be taken out to be sure that buyers are taking over in this scenario, so as in the sell scenario. So another stuff you need to know about confirmation is the use of 50% mitigation of your POI. Excuse me, let me take a while. July stuff is still recording. Am I still recording? Okay. So another stuff you need to know is the 50% of your POI. Now your point of interest, I think I still have my PC is about to go down. For your point of interest, now for every point of interest you have, higher time frame holds the more larger orders. Let me go over to the chart. Let me use UK 100 as example. This UK 100, I took this trade right here, so I'll use it as an example. So yeah, this is a market structure. This is a sweep. Now this is a sweep, right? This was break or structure to the downside, break or structure, and then see that price took out this sweep, also took out this structure here. So if that price took out only, this is a week to week scenario, there have been no valid break. If price breaks this high that caused this week to week, there have been no valid break of structure, but then it had to now break this external structure. I'll be sure that okay, there is a momentum shift. So if we use the candle chart, the line chart to check it, you can see this was the line. Price didn't close well below that line, so this is just a week to week scenario. So this is the chart, the what I call the candlestick chart here. I'm going to watch this. Okay. So yes, I'll wait for what? This is the market structure shift, break of structure, inducement, point of interest. I'm looking for a 50% mitigation. Now you have to go to the higher time frame. Go to the most highest time frame where you can refine your POI is on. So if I go to the 1 hour time frame here, I'm trying to rush things. You see that the POI is not refined. Go to the 2 hours time frame. It's not refined. Go over to the 4 hours time frame. You can see that this way is more refined. That you either use the Fibonacci tool or you go to the settings here, style, turn on the middle line button. You can see the 50% here. Wait for the mitigation of the 50% to be sure that orders have been taken out before your confirmation. Now, if there are still orders left at this order block, price will show you your confirmation and to take out your confirmation to fill out those orders still waiting here. So this is the confirmation here. Sorry that I'm rushing, my PC is going to be off very soon. So this is go to the 15 minutes, break of structure, market structure shift, high boss, enter the breakout, stop loss below the low of your confirmation, and then you can target the week high of your setup. So break of structure, retracement, protected low, week high. As easy as that. This is a 1:4 setup. I would have gone to another setup, but I don't have much battery here. So just keep these things in mind. Your break of structure to which pair was I using? I have to be quick before my PC runs down. So yeah, we looked at point of interest, breakout block, other blocks, swept other blocks, combining structure with liquidity. Yeah, your break of structure should be either a protected high or a weak low. Just know it like that. Valid time, multi-time framing, daily time frame for your buyers, 4 hours for your market structure shift, 1 hour, 2 hours, 4 hours for your setups, and then 15 minutes for your confirmation. Confirmation entry, your two-factor authentication. Either it breaks a single swing point. If there's one structure only, you don't have any need to use the confirmation entry and other stuff. But if there are two structures, you have to use the two-factor where price breaks one swing point and gives an eyeball, so that's an internal structure break, or then it breaks both structure. Be sure that the opposing side has taken over the market. So that's basically all for now. This should be the last class. I'm not giving that assessment. If you watched this part of the video, you can drop your questions in my DM. I'll answer to everyone. So peace and love. Everyone should take care.